traders. So in today's video I will talk about one of my favorite ways to have a trend confirmation in the markets. And as you know, trend following reduces risk and therefore it increases profit potential. So it is a key to have confirmations and to eliminate any kind of misinformation. So especially when you are trading with robots, you have a certain set of rules and your robot will follow those rules, and if you don't give the right right engine and your robot the right data to make good decisions for you, then how you would expect your robot to make profit for you? When you are coding your robot or you're figuring out your strategy, you have to be really serious about it and really precise, because if it is to make a trading robot would be really easy, everybody in the world would be a millionaire and money won't worth anything anymore. But making money is with trading robots or with manual strategies is not easy. It is actually quite a hard way, but if you successfully can achieve it, you will be free. And freedom, in my opinion, is the most important thing. So this is why I can spend even an entire day just optimizing and backtesting and just focusing on how to make my EAs better and better. And when I come back from my travels, I tend to, because this is my way to do it. I travel, I make love, I do these things, and then I can focus more on the technical stuff, because I live life and I am not burnt out. And it is really important to not burn out, because then you will just put some robot on the chart and you just try some strategy and you won't care about it anymore, and it is not good. So when I come home and start work, I tend to just not even I don't even sleep. I just 24/7 do these things and just eating. I eat sometimes, but sometimes I forget it, and I'm just programming and optimizing and backtesting and figuring out new strategies and write it down to my journal and make videos, because that also helps me to think. And I love your questions, because I always have new perspectives, and that is really important if you want to be profitable in the long term, to not stuck in a rut and just think in the same way, because the market is constantly changing. So you have to constantly change yourself. And so in today's video I will talk about the VIX volatility index indicators, and so how you should use it, because it is just so insane to me that so many people are trying to trade the volatility indexes. And I was just thinking about it because so many people just write to me that if I have a robot to volatility indices, and I was just thinking about it, and I really don't understand why people are so fascinated with these ones, with these indexes. And then I was just thinking about it, and I realized that, oh man, it is the same. It's the same as any other gambling asset. So brokers and big banks, you know, they develop these instruments that are just really volatile, because most people in the markets finding even forex or stocks or just normal instruments, just they find it just too slow, that it doesn't move, and it is just a bullshit, you know, I want money, and and it's okay if you want money, but if you want to make it in the forex markets and actually want to make money, not just for 1 minute and then lose it in 1 second, then you have to be more serious than that. Because at the end of the day, if you trade these instruments, you have a better chance to make money with lottery, because this way it is 100% that you will lose, and that way you have some chance at least. So I want to talk about these indexes because they are not bad in overall. They can be used very, and it is very beneficial for your trading if you use them, but don't directly trade them, because that is just insane. And I will make a video on these type of things and why I don't recommend to actually trade them, and I will show you proof why they won't work mathematically. But anyway, I guess the same people who trade these instruments are the same people who are trading with scalping bots and grid and martingale systems. Those are also proved mathematically to not work. But so let's say that you are a forex trader who is following the trend, but you don't have the last step. Your system is quite good, it works, but there are times when it just hurts so bad, it burns your entire account, and you think that, man, if I can just eliminate, I could just eliminate those mistakes that the EA does, I would have been so profitable. And so there are a couple of indicators that are really beneficial to confirmation and to eliminate ranging markets from your trading EAs. And so volatility indexes are most of the time historically have an inverse relationship with the stock markets. And so what does it mean? It means that and it is really interesting from a statistic perspective. What does it mean? It means that when you let's say trade a some stocks or some instruments, and you have the volatility, most of the time it means when the volatility index is high that the trend is not quite good. And most of the time a decline in the volatility index means that you have a better chance for a good trade. So and you might think that, oh, it is pretty obvious, but it is not that obvious, and it is a really interesting from a statistical perspective and how human behavior drives the markets. It is just really interesting, but you can turn it to your advantage. And so I highly recommend for you to try to use these indicators. Don't trade them, but definitely use them in your trading EAs and your manual strategies, and just try to do some backtest and some optimization and forward testing and analyze if you can use them. So have a different perspective on these volatility indexes than you did before. And I actually really like these types of confirmations and these tools, especially to eliminate ranging markets. I mean, not eliminate ranging markets, but you know, give my EA instructions to not trade them when I want to trade the trend, because if I have a good trend trader, most people think that a good trend trader will catch the good trends at the bottom and goes to the top, and it is great, and they don't think about how you can avoid ranging markets, because the EA will think that it is a trend when there is a ranging market. And if you always want, especially if you always want to enter at the bottom or the top to the trend, and so you will have much less trade if you have more strict rules. But at the end of the day, I assure you that you will be much more profitable even with much less trades, because if you have more strict rules, yeah, you won't catch any all the good trends and every good trade, but at the end of the day you will catch really great trends, and your EA won't trade the ranging markets all the time and won't burn your account when it is just, you know, the market is just ranging. And it is just really important. And so the way I use these indexes is that I give, you know, logic to my EAs to not. I have multiple indicators and price action patterns, but this is also a layer, and so I give my EAs the instruction to not trade when the volatility indexes are just high, and it is actually based on back and forward testing. It is actually really beneficial, and it adds value to all the price action patterns and other indicators that I use to eliminate these ranging market trades. So yeah, this was today's video. I hope you enjoyed it and you find it useful for your trading. I know I talked a little bit slow, but I try to think. I try to just speak a bit, you know, just in a clear way, so you can because I have so much stuff in my head, and I just came from work and optimizing for I don't know 8 hours, and I have so much data and in my head that I realize that I tend to speak like an insane person, and no one understands what I want to say. So sorry for the slow talk, but I hope you watch this video. Maybe you can watch it, you know, with double speed, but it is actually a useful video in my opinion and useful information. So yeah, Take it to your advantage, and ciao.